The rise of fully digital banking is changing how we manage our money, but it's not without risks. If you're fully relying on digital banking, you need to know some critical dangers that could affect your finances. Stick around to the end, because I'll reveal one major risk that could cost you far more than you expect. First, let's talk about the security of your money. It might seem like digital banks are just as secure as traditional ones. After all, they use encryption and advanced security protocols. But here's the thing, hacking is on the rise, and digital banks are a prime target. When your entire financial life is stored online, a breach can expose everything, from your savings to your personal details. In 2020, one of the largest banking hacks affected millions of people. Could you imagine if that was your account? Now, here's something not everyone thinks about. The second risk is the loss of personal interaction. At traditional banks, you have a physical location to go to if things go wrong. But in a fully digital world, you rely on customer service over the phone or online chat. And let's be honest, how many of you have ever been stuck on hold for hours with no resolution? It's frustrating, right? Well, when you're dealing with large sums of money, this lack of personal service could cost you time and money. And it's even worse when it comes to resolving issues with your digital account that could take days or weeks to fix. The third risk is something that's becoming more common: system failures. Imagine not being able to access your bank account at all. That could happen if a digital banking platform has an outage or a technical issue. In fact, this happened to one of the largest digital-only banks in the UK a few years ago, locking users out of their accounts for days. If you rely solely on digital banking and that happens to you, your funds could be inaccessible at a critical time, leaving you in a bind when you need your money most. The next major point here is about transparency. Traditional banks are regulated and they have to disclose a lot of information to customers. But with digital banks, you may not always have that same level of transparency. They might not be as open about fees, policies, or even how your data is being used. Without a physical branch to go to, it's harder to get the full picture of what's going on behind the scenes, and this lack of clarity can leave you exposed. And then there's the matter of stability. With traditional banks, there's always some sort of safety net in place, like government insurance for deposits. But some fully digital banks are still new and not fully backed by the same level of government protection. If one of these banks runs into financial trouble or goes under, your funds may not be as safe as you think. It's important to make sure your digital bank is fully insured and protected. Finally, there's one more thing I need to point out: reliance on technology. If your digital banking service goes down, you might not have a backup plan. Whether it's a faulty app, a server crash, or a simple tech error, relying solely on your phone or computer for banking is risky. Without access to a physical branch, you could be left high and dry if something goes wrong. And trust me, I've seen it happen before in my own experience. So, what's the solution? If you still want to enjoy the perks of digital banking, make sure you have a safety net. Don't rely exclusively on one service. Spread out your funds, stay informed about security practices, and always have a backup plan in case something goes wrong. If you found value in this video, don't forget to hit that subscribe button to support content like this. And remember, staying informed about digital banking could save you from serious headaches down the road.